Well, Lee, look, Jay Powell said that he would call for a quarter-point hike at this month's meeting. The meeting is March 16th. As you know, there was a debate going into this meeting about whether or not the Fed would be able to pull this off, right? And Stephanie Pomboy is going to join us coming up in the program. She said a while ago she doesn't think the Fed's going to be able to raise rates at all. You think that the Fed is not backing off of rate hikes this year is not a real risk. Tell us what you believe is going to take place here.
Well, I don't know if he's going to raise 0 versus 25 basis points. He said earlier this week 25, but I've said it for over a month, maybe 2 months now, that it's a fantasy that he's going to raise 50 bips. And I think a lot of Wall Street analysts want to get a lot of PR by saying things like they're going to raise 6 times, they're going to raise 9 times, they're going to raise 20 times this year. The Fed never got hawkish. What happened was Wall Street comes into the year with high inflation, and suddenly they pull forward. These CIOs and analysts pull forward rates going into 2023 and 2024, just like we were pulling forward earnings for stay-at-home stocks back in 2020. So that is not the risk that I see here. I understand that there's a high chance of a policy mistake, but hey, I don't know who got into their mind that somehow Jay Powell's going to invoke the ghost of Paul Volcker and he's going to destroy the stock market. Jim LeCamp's right. High energy prices are already enough, and I think when we look at the jobs report, we're going to start to realize maybe the Fed isn't going to hike at all. I wouldn't doubt it. The real risk is sticky energy. This is not Gulf War I. Just a month ago, OPEC was saying Russia couldn't even meet its targets. They were below targets by 40 to 50,000 barrels, and 40% of OPEC countries can't even meet their targets. So we had this energy problem for a while, but the Fed is not what the issue is. I think the issue right now is investors need to figure out what they want to own for this year and buy it. And like Jesse Livermore, the great trader, said, I made my money in the sitting. I didn't make my money in the trading.
Yeah. So do you want to get out of the way here then, Lee? I mean, do you want to just let markets settle out and do what they do and not be trading?
Yeah, I'm already overweight over the last month. I started accumulating with the correction that started in January, and I think that the Ukraine-Russian situation has been, this is a horrible situation, but it's been so great for investors who are crisis investors and like to buy low because it kept that January correction all through February. So this was a nice opportunity. If you didn't buy the February dip, you can do it right now. You can do it at the open. Probably next week you're going to see still low prices. I think it's the time and opportunity to buy and not take some shot on trading. I'm more overweight stocks, underweight bonds, lock it and load for the rest of the year.
And I know, Mike, you feel that way as well. We've talked about this for